Yeah, good day, good morning, good evening, viewers across the globe, across the country, and across the globe. Hope you guys have been having a good weekend. I'm here, it's your boy Pedro again. I'm here again to give you sort of a weekly roundup just before the week rounds up. I want to give you like a weekly roundup on of what has transpired in the markets this week, starting August 16th to 23rd, and as well share with you my takeaways as well. So it's been a pretty boring week from as far as I can tell. It's been a pretty boring week for me. And if you've been an ardent follower of the market, an enthusiastic follower of the market, then you should know that yes, it's been a boring week. So what happened was this week was basically about a mini retracement. What seemed to be like a mini retracement from the market in general. So screen. Okay, so basically we had this huge bullish engulfing candle on the 13th of August, which engulfed the previous three red candles, and it was some sort of a retracement of, so we're expecting to see, like, we've been expecting a major retracement ever since this swing low here, and the market has really not, the bulls have practically been bullying all the bears in the market. We practically have no bears as it stands now. So whatever we see happening now is basically, bulls and bears are basically the same people, but it seems like they are all in now they are all in on the greens. So the bears, it's like the whole marketplace, everyone is so scared to sell at the moment because the bulls are practically bullying these guys, like for real. You can see that I've explained this several times in my previous videos. I'll be dropping a link as well in maybe the description section or whatever platform you're watching, so you can check that out as well. You can see that this practically no selling power at the moment. The bears are practically dead as it stands. They try to they've not been able to muster even a proper retracement or a proper swing low. You can see that at this point we're expecting them to do something serious after failed attempts, previous failed attempts here and here. So we're expecting them to do something serious. Then after almost like the entirety of this week, they've just been trying to do that, and then all they did was, even after 4 consecutive red days, we were unable to engulf this huge engulfing, bullish engulfing bar. So that seemed very boring, and there was it was a period of very low volatility, and low volatility periods are usually very boring periods in the marketplace. So you can see the volume was practically dead from their end, and then the bulls were like, we're tired of waiting for this. They had to pick up again on the 19th, which was on Thursday. So another huge bullish engulfing pattern as well. It's followed by another huge one again to the upside. So we almost hit the 50k mark, and we're seeing some sort of a retest because we've broken the former high, swing high, at around 48, almost around 48,002. 48.1, close to 48.2. So we're kind of retesting that. We broke that on the 20th, which was on Friday. So we're retesting it today. We're seeing a retest to that level today. So that seems to be the case right now in the market. So it's been nothing pretty much serious. There's no battle at the moment. Everything is pretty straightforward. The bulls are in full control. They You just need one massive bullish engulfing bar to take care of things. So I'm looking at it if to me, I feel like, okay, this is not going to be like a serious retracement, because I think the bulls are looking to hit the 50k mark and then probably see 53, which is like the next serious resistance kind of. So I think that if the day and the week today closes below this former swing highs around 48k thereabout, then maybe we could head down again. We may see something similar to what we saw this week. In the coming week, which begins tomorrow, we may see maybe a retest of 45 before we could head up to say 53 again. So that being said, I'm also looking at this. Remember that we wanted the day and the week to close above our 45k. That has happened. We've had a day close above 45k, followed by a weekly close as well last week above 45k as well. So right now we for an extra confirmation, we're expecting the week to close again to ensure they stay above 45k, and as it stands now, they are good to go. We've seen some sort of a retest back to 45 of some sort, because this is a week, and we had a low of 43,955. So that is a good retest to that 45, as you can see here. So we had a retest to that level, and then 45k, and then we bounced off. We're currently closing the week at 48.5, so it looks pretty good for the bulls. As it stands now, I don't think there's anything stopping them again. We're definitely going to close the week by God's grace at both 45k as it stands now. So when the week, we're looking at roughly 8 hours before the close of the week. So as things stands now, I don't think there's anything stopping them from closing the week. So that to me is a confirmed close above 45k, which is a close in confluence with the close above the 21 MA weekly MA that I've been talking about before, which has proven to be a real case for an uptrend bias in the market. Once the market stays above that, past historical chart data has shown in the past that once the market stayed above this dynamic level 21 EMA weekly basis, we tend to be in an uptrend, proper uptrend. And the moment the market closed below that, we had, which happened in May, we happened to lose our uptrend throughout that period. So we closing back above that period is another very good confirmation of a decent, a proper of bouncing back, of a proper bounce back from the markets. So that has happened, and then we needed like an extra week, and this is already happening again. So that's a back-to-back weekly close, not just back-to-back weekly close, but a convincing one. So if that is not, to me, that is the battle is over for the bears to me. So all the bulls need to do is to keep maintaining that. They've laid the foundation, so they need to just keep maintaining that, protecting and maintaining that foundation. It has to be intact. They need to just keep. Remember, I said during the week, in my previous broadcast, that even if the market retraces down to this territory, they should at least close back the week above it, which has happened perfectly. You can see that the market went down to like 43k, 43k, below 44k, 43k 9, and that was all part of the retracement which has been happening on the daily time frame. And then you can see that despite all that, they've closed back above it, to tell you that not just on a daily basis, but they are closing the week above it. So that's to tell you that yes, like I said, that's what the market needs to do. That it may happen to retrace below it during the week, but it should at least close back the week and the day above it, and that is what has happened perfectly. So that's a summary of what has happened in the market. It's been a very boring week so far. Have another week yeah, so that is it. Another week closed out above 45k, not just a close, but a convincing one, very well above 45k. We're looking at 48.5k as it stands now. So to me, the game is over for the bears. They should pack up and leave. To me, it is finished. The battle is over. So if that is not a final confirmation, I don't know what else is. So that is the little from me for the week. So okay, just before I pack up and leave as well, I'm looking at the takeaway. So this is how the markets retraced. Trying to come up with how the market retraced. So this is the point where the market retraced again, and this is where the market seems to be headed towards, where I'm expecting another resistance. So this was our last swing low. This is kind of, this is clear enough. I think I should use another chart. So okay, I'm also before I do that, I'm going to be showing you the total market cap as well. Whatever is happening on Bitcoin and the total market cap, because Bitcoin has the largest control over the entire market. So whatever happens on Bitcoin, it's replicated on the total market cap as well. So the total market cap during the period of consolidation, you can see that it was practically, we're having this major resistance at $2 trillion. So at the moment we got to $2 trillion on the 13th. If you can remember my analysis from the Bitcoin, when I started talking about the 13th, when we hit 48k or so on the 13th, so that very moment on the 13th here, we had this. I think I should zoom out, or zoom in so you can see on the 13th. Remember me pointing out 13 on the Bitcoin market. So the moment we got to that point, we had resistance, and then this started. We had these multiple rejections afterward. 1, 2, 3, 4, 5. So this was all during the period where Bitcoin was retracing during the week, and then we had, this was on the 17th, 18th, and then we had this was the period of this was the day we had the doji sign, and this was on the 19th when Bitcoin picked up the huge bullish engulfing. You can see how exact it is, the exact price action, the same behavior of what's happening on Bitcoin chart. So basically, most times I don't do this. This is the first time I'm actually doing. I don't present this during my broadcast because it's basically the same thing. So I just wanted to show this to you, to tell you how it's practically the control, Bitcoin has over the market. Whatever is happening in the market is basically what's happening on the Bitcoin chart, or in the Bitcoin market. So you can see this is the day we had that huge bullish engulfing that engulfed the previous candle on the 19th, and then this is the second bullish engulfing candle on the Bitcoin chart that also took prices to almost 50k. So this is where we are now. These are the last two red days. You can see how perfect and exact it is with the Bitcoin chart. So we've broken past the previous resistance, and you can see that even on the total market cap, we are currently retesting the level we broke above. So basically, if we break below this, we could head down a little bit before bouncing back, but as things stand now, we're still above that, so we could a close bill above this may see prices go back upward again. So the next resistance after the next major resistance after this point is 2.3. Yes, 2.3. So back to the Bitcoin charts. So Bitcoin basically retraced from this point. It was basically retracing from the 38. The previous retracement at this point, major retracement, was at 38.2. So the same thing what happened again from this point to this point. It retraced at the 38.2% Fibonacci retracement level. So which was also in confluence with the 20 EMA level as well. So basically that is it from me. I didn't expect to make this very long. So remember that crypto trading, whatever I show here as usual, is for educational purpose and not to be treated as financial advice. Crypto, forex, and all financial instrument trading is a risky affair. Always endeavor to carry out your own research before entering any trade. So if you found value from this, please endeavor to comment, drop your comments in the comment section, share, like, follow whatever platform it is you're seeing this, viewing this from, and subscribe as well. So thank you very much. Have a lovely week ahead. I think I'll be dropping another broadcast tomorrow, God's willing. Thank you very much. Have a lovely week ahead. May the bulls be with you. Bye bye.